Hello and welcome to another update video about LINK. LINK continues to move in this corrective price channel. The structure that's currently taking place reminds me quite a bit of what happened here between December last year and April. So a very, very clear three-wave structure. Cannot rule out that something similar happens here again in basically such a corrective structure like this, okay, before we then carry on with the downtrend. Something more bullish is of course possible, but honestly we need to base our observations and analysis on evidence and what we currently see on the charts. In yesterday's video I explained to you like the different scenarios that could play out here, also a bullish pathway, but there are unfortunately other scenarios that would come into play first. Well, first of all, for me, the more imminent scenario is the one that LINK is just obviously because it's still in the price channel and also within this range, which is sort of constrained by the $9.50 resistance level, and down here the area around $5 to $6. So we've got this price channel or range rectangle pattern until we break out of this range. I mean, this is just range trading, right? So we don't really have a clear trend here. If at all, then we have a downtrend because it's making lower highs and lower lows, and has started to do so basically here in January. So few scenarios possible. Currently preferred scenario is here this white wave count. Wave 1, wave 2 is currently in the making, potentially as a flat pattern. And then a third wave down, a fourth wave, and a fifth wave. This is the preferred scenario. Doesn't mean this has to play out. In fact, I often say that within diagonal structures, and this is a diagonal structure, we have to expect the wave count to change. Yeah, in diagonal structures, Elliott wave alone, it gives you a roadmap. It tells you, what is the most likely scenario, but still, because we know that corrective wave structures change often. That's just what they do, because there are more than 10 different corrective structures, and within each wave, within an ending diagonal, each wave is corrective. So a wave 1 is corrective, a wave 2, a wave 3. So because these change, and for example then we have a WXY structure here, the wave W is itself an ABC structure. So it's just a mess, okay? And therefore, don't be surprised if wave counts change in a correction. Until we see an impulse, this is going to play out. The trend is down, lower lows, lower highs. We have a very clearly defined descending price channel. We have a very clearly defined horizontal price range. And first of all, we need to see if the price can push above $8.65. If it can't, then I will continue to count this as a wave 2, which would project further downside into the $3.50 region roughly. If the price can break above it, above $8.65, then the idea of a wave 2 will not be invalidated until the price breaks above $9.50, but it will get less likely. Then, however, few other things could play out. It could be that we're dealing with an extension of wave 4. I showed you that one yesterday, because we could assume that a wave 3, as currently as well, bottomed here in June 22. Then we had basically an A wave to the upside, a B wave down, and we're now moving higher in some kind of a C wave, in potentially a 5-wave move to complete the wave 4 a little higher. That's possible. Basically a fake out, a bull trap, okay, and then breaking down again. That would delay the entire sell-off, but that is a valid scenario. So we would have basically 3 waves and we would make a new low. If, however, after a 5-wave move up, we see a 3-wave pullback, we can then define a support area here and highlight, okay, we've got 5 waves up. If the price holds this region, we could set up for a 3rd wave rally higher. These are the short-term options here, in my opinion, on this chart. So it's not bullish yet, not clearly bullish. It always depends on the time frame, but this is still caught in a range. So we need a range breakout to suggest that something more bullish is going on. On the other hand, it all is a matter of time frame, because looking at the long-term chart, the chart that I've been showing you now for a few weeks, because it's always worth understanding the longer time frame, the larger time frame, you can see that this is the long-term support area to which the price has been reacting since May 22. It's the 38.2 Fibonacci retracement. Most recently, the price reacted to it again. So if you're interested in range trading, you could just have bought all these lows, right? And always taken profits here in the resistance area, basically just split this in half and work like a grid bot. That's what I've been saying for a while, that for Link, probably gridding is the best option. It's not trend trading, it's gridding. That's the best strategy at the moment. But yeah, this shows you sort of the long-term prospect. So certainly bullish, but just below sort of $2.90, I would start to get concerns long-term. So in the next bull run, yeah, we should get sort of close to $100, maybe even higher. But that is, potentially far in the future. First of all, the price needs to convince us that something more bullish is going on and that we're not just moving and continue to move in the range. So I cannot call a low in place at the moment. The pattern that's the given is a range and a descending trend channel. Only when the price shows us that it can break above it, we can look at, okay, are we potentially already here in the fifth wave? That's my update about Link. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.